everyone. Welcome back. It is day 3. Today we're going to be talking about candlesticks. These guys. So I just want to start out by saying candlesticks are pretty simple. It's not going to take very long to get through this. That being said, let's get right into it. So every candle has a time value to it. So this candle is a day. It takes a day for this candle to finish forming. On TradingView, you can see to the right, it tells you how much longer it takes for this candle to finish. This candle, all of the candles other than the one that's forming have already closed. Their history, they're done with. It's happened. It's not going to change, right? So these are all done with. They've closed. They've done their thing, shown their price action. Okay. And when you're looking at them, okay, let's zoom in real quick. Zoom. Every candle has a body. That's what this big blue area is. That's a body. And then it has these long stick-like things at the top or the bottom. Okay, usually both. Usually it has them on tops and bottoms. Okay, that's a high and that's a low. They're called wicks. Okay, it doesn't matter what you call it. It's a high and a low. We're going to draw it out though because it's kind of hard to look at it while it's moving. On my screen it's blue, but when a candle is green, that's because it opened and it went above the open. The price went above open. Okay. If it has a wick, it went below open. And if it goes below open, it turns red. But if it closes above the open, it'll turn back green and it'll form a wick. It'll have this little stick thing hanging out the bottom. Okay. This will be green. This will all be green. Okay. Or blue or yellow or whatever the color you want to use. On the body, on the big fat part, the bottom of the green ones, that's the open. The top of the green ones, that's the close. It's the other way around for the red ones. Because if you're talking about price action, it's going up in the green ones. It opened, went up, closed up, stayed green. For the red ones, it opens, and even if it goes above open, great, it formed a high, and it turned green, but it went back down, and when it went back down, went below open, turned red, closed. It's a red candle. That's what we call bearish. That's what we call bullish. Okay, bullish and bearish pretty much just mean down and up. Pretty simple. Down and up. Don't forget it. All right, so now that we understand the anatomy, you know, where the highs are, where the lows are, where the closes, and where the opens are, I want to take it to a chart and start looking at the chart. Okay, so let's go to 15 minutes, where each candle has 15 minutes of price action. Okay, so within this candle, there's 15 minutes. Within this candle, there's 15 minutes. Okay, let's just look at these. So with this candle, you got boom, beautiful blue candle, went up. Okay, with what we know, this candle, this blue one, closed right here. And this one, this longer one, opened right there. Okay, it opened. Where's the lowest point it went to? It went down here. Where's the highest point it went to? It went all the way up here. And where did it close? It closed right there. And where the next one opened? Where the blue one closed, it opened. And then the highest point it went to was up here. And then the lowest point down here. And then within that 15 minutes, it closed right there. And the next one opened right there. And then so on. Went down, lowest point, highest point. At some point, it filled back up this candle, went back down, closed below, made the next candle, went up, low. It doesn't get any more simple than that, okay? The other thing about candlesticks is reading the wicks. Each wick has a weight to it. So this candlestick has a really long wick on the downside. meaning it went all the way down here and it turned red. I mean, this whole thing, it looked like this when it was down here. It looked like this candle when it went down here. But there were so many buy orders that it pushed price up and went all the way up to this point. And then before the 15 minutes were up, it closed right there. So what's so great about candlesticks is that it gives you a ton of information. It gives you all the price action that happened within the day. And what's great is you can keep scaling it down. So right now we're looking at a day. Each candlestick is worth a day, right? During the day it went up, it went down, and it shows you that it opened here, closed here, but it went up, created a high, created a low. Right? But you can scale that down. You can go to 4 hours and it shows you every 4 hours. And you can tell, okay, so this was that day that we just saw. But it's broken down into pieces. So now you can see the extra weight that it holds. So at some point during the day, it slowed down. It wasn't just this big move that we saw here. It wasn't just this spike. For at least 8 hours, it kind of stayed in the same spot. Right? And then you can keep scaling down. You can go to an hour, right? We didn't even see that red candle. As far as we know, looking at a 4-hour chart, it just went up and it went down and it's still trying to form that. So we don't know if it's red. You scale down and you see a red candle. Oh, great. That's more information. Well, what happens if you scale into this hour? What's in this hour? Well, let's look at the 15-minute. Okay, so that's what this hour has been doing. Let's keep scaling down. So that's what those last 15 minutes look like, broken up into 5 minutes, right? Break that into 1 minute, and you can see what it's doing right now. And if you pay for an account, I think you can even see seconds, but I'm not going to pay for an account. Screw that. We were just talking about cutting expenses yesterday. Paying for a software is the last thing you should do. As you can see, this candle has 45 seconds to finish forming. It'll do its thing. It'll probably create a wick and you'll see it close. Yeah, see, there you go. Beautiful wick right there. That's a lot of sell pressure. If you were trying to trade this right now, you'd probably mark that as a high and be like, oh yeah, it does not like this price. For buy orders, there's too many sell orders sitting right here, sends it down. All you need to know is this holds supply, okay? And this one holds a lot of demand. There's a lot of buy orders sitting in this wick. Price, it looked like this at some point, and then it skyrocketed back up when it hit this price within the minute. I mean, we're looking at minutes here. Beyond that, there's also patterns. I don't really use candlestick patterns because I kind of go off the weight of what the candle's telling me, not the pattern itself. From what I've heard, this candle typically means a lot of buy pressure is there, right? So some people would take their trade and they'd be like, oh, look, there's a doji, it's going up. Well, that doesn't mean shit because look, it's going back down. Okay, so there are certain patterns that we will go over, like fair value gaps, right? Because those are important. If you just look at this candle, great, it went up. It had a whole minute of going up. Okay, so all we know is that in this price, there's a lot of demand. There's a lot of buy orders. You can see here that the buy orders, when price came back down to this area, the buy orders filled and price kept going up. So that's kind of the weight behind it, but I wouldn't take it as a pattern itself. In my opinion, basing everything off of patterns like that is just guesswork and it's not going to get you anywhere. Understanding the weight behind each candle can help you determine what the candle's actually doing. Like why does this matter? Okay, there's a lot of buying orders that happen at this level. Okay, it rejected it twice. Okay, lots of demand sitting below this, a lot of buy orders waiting to be filled. Market makers, sometimes they manipulate this and they'll push price down and then they'll fill all of their orders that are waiting and price can finally go back up. All right, so there are a few identifiers that I'd like to go over. There's really only two that I kind of use. We talked about the weight that sits behind each candle, but there are names for it, and I guess I'd like to go over the names. There's full body candles, and that's what like this big blue one is. It's a full body candle. It's got small wicks that are smaller than the body. So full body, okay. And then there's doji candles, like this one, where the wick is significantly longer than the body. Okay, the body small. This would also be a doji. Um, this would also be classified as a doji. Some people call these hammers. Hammer, doji. It really doesn't matter. I think there's one called a morning star. I think that's what this is. Don't quote me on that. Don't. All I want you to worry about is if it has a long wick or a long body, because the wick shows demand or supply, and the body shows zero resistance. All right, so I was kind of editing the video. I think we're pretty much wrapped up for today. I just want you guys to understand that when a candle creates a wick like this, it was able to push price down, but within the time frame that you have your candle set to. So for us, this one was in a minute. Within a minute, when it pushed down, it shot back up and it closed bullish. It closed positive. It proves that there's a lot of bullish sentiment, that there's a lot of buying pressure that sits in this price action. And you guys didn't see this before because this was forming literally 10 seconds ago with what you saw. But now you can see where I drew it out when we were talking about this big fat candle, okay? We mentioned sometimes market makers will manipulate it and they'll sweep out these orders so that price can go up. I mean, we drew it exactly like that. That's what happened. That's what happened. And you guys saw it. All I was looking at was a candle. All I saw was a candle. So what I read there was the weight that this candle holds and then that this price action holds. There is demand sitting below this. It's undeniable after you watch it happen live. It did exactly what we said it was going to do, and it's still going up. It stayed above that price because there's a lot of demand still sitting here, and it kept pushing. It kept pushing. So being able to read the demand and the supply of a candlestick will help you formulate how much each candle weighs too. So if we zoomed out to 15 minutes, we wouldn't see that pattern that we saw, right? We would see a little different one, okay? What we saw, it looked like a big deal, right? It looked like it took forever for that to happen. In reality, it was just a little pullback. All it did was fill this, which we're not going to talk about today, but all it did was respect this price where there's a lot of demand sitting. It went below this low, swept it out, took these orders, pushed up, and all we did was read a couple candles, okay? So that's kind of the value in understanding individual candles and knowing how to understand the weight behind the price action that happens within each candle. That's about it. Like, there's just not much else to go over. I could ramble on for an hour about each specific candlestick pattern, each specific little meaning behind different patterns that each candle can make. Like, this just means indifference. This candle, this red one, just means price went up, it created a high, it created a low, but within the minute, it stayed at the same price. At the beginning and end, it stayed at the same price. It means there's an indifference. There's no bias in this minute. In this minute, there was a ton of bullish bias. There was a ton of buying bias. It pushed price up for this whole minute. Yeah, it went down a little bit, created a low, but it pushed up, pushed up. Okay, that's all you need to understand about candlesticks. how to read the weight, how to read the demand and the supply. Understanding supply and demand was one of the big things for me. It's not that hard. I mean, that's what it looks like to read the candles. If you want to get more in depth, you can be like, oh yeah, this candle rejected this price. And then the next candle went up. So this candle holds demand underneath it. You can explain it that way too. You could also explain it this way. This candle created a high. It rejected, creating a wick, meaning there's a lot of supply here, forcing price to go down until it hit this demand, forcing price to go up until it hit the supply again, and it created another pullback until it hit the supply again, create another pullback until it finally broke out. I don't know what else you guys want me to tell you. That's candlesticks for you. If you want to go watch an hour-long video about how to read candlestick patterns and shapes or charts or it's not important, but you can do it. Just go look it up. That pretty much wraps it up for today, guys. I think that's pretty much everything I want to cover about candlesticks. If you really want to learn more about candlesticks, there are hour-long videos that you can find that talk about candlesticks for an hour, and they'll go more into depth about other things. I just don't find a lot of value in most of that, because what I went over was enough to tell you that this happened. Right? We drew it out. You saw I drew this move out, and then I came back 15 minutes later and it happened. Okay, so we did that just by reading candlesticks based on what I told you. I have spent time watching those hour-long videos. Frankly, you don't need to know any more than I told you. The patterns that they will try to teach you on the charts are useless if you can't tell the weight that sits behind it. It's the weight that matters. It's the weight that tells you where price is going to go, right? Like, look at this. That's a bottom. That's a bottom. It just is a bottom. Price might sweep it. That's a bottom right there. It rejected. These wicks mean there's a lot of demand, because within the minute it just went boop, popped right back up. And this one hit it, popped up, went up, popped up, still going up. Now, that doesn't mean it will stay up. It just means it's rejected this price, and that means later in the future, there are orders that sit here waiting to be filled. And if it ever comes back down to this price, those orders will be filled. Whether it's a ton of orders or not, these orders will get filled, and it will go up a little bit before it goes back down. That's just where orders are sitting. There's also probably stop losses sitting right here too, which if you have an options, that opens up shares too. All right, I'm getting too in depth. All right, get out of here. I'll see you tomorrow.